Everybody, welcome back to Swing Trading. My name is Mike Fairboard. Great to be back with you today. A lot to look at here today in terms of potential swing trades and possible bounces, not only off the top end, but off the bottom side too. I want to look at both because, as you know, as we've seen, trends can start clearly off the bottoms. And as they do that, we can see some swing trades occur there as well. Hope you're having a good day and a good day in the markets ahead of maybe an interesting day tomorrow with the Fed rate announcement. I know that a number of analysts are saying no announcement. The market seems to be pausing a little bit, but there are some interesting sort of flag setups out there, depending upon how the market might react. And by the way, not to mention earnings as well. If there's not enough news to look at, right? We're kind of in the middle of earnings season. A lot of companies just kind of flattening right out, and then you got earnings like tomorrow or the next day. So we should know pretty quick on a number of companies, but we'll take a look at that momentarily. How's it going to all of you? Good to have you on board here with us today. Recognize all you guys here. Great to have you. And by the way, we do have Cameron May helping us out in the chat. As always, great to have Cam on board. Does an excellent job. And folks, you can follow us both on X, Cameron May, CS, Mike Fairborn, CS as well. All right. Yep. Just keep that chat rolling. Any questions, comments, I'll keep an eye out for them as well. Okay. Well, with that, let's turn it over to some disclosures to get through this quickly. Then we'll get the show on the road here. Some information here is for general information purposes only, should not be considered an individualized recommendation. Options carry a high level of risk, not suitable for all investors. Short options can be assigned at any time up to expiration, regardless of the in the money amount. A short put risks purchasing the underlying stock at the strike price when the market price of the stock will likely be lower. Paper money software application is for educational purposes only. Investing involves risk, including the loss of principal. There's no guarantee that execution of a stop order will be at or near the stop price, and past performance is no guarantee of future results. We are going to look at a company or two that does have dividends. So as a side note, dividends are not guaranteed either. Okay, and we do look at futures in this class. There's a few different disclosures there on futures. With that, though, let's just turn it right into the markets and get a good solid look and see what is going on for the time being, folks. Now, a quick note just on the S&P 500 index. You can see the strength really of the rally coming up. Now, at this time of year, I can't help myself, folks. I constantly will take time to come over here and just look and see how are we doing relative to seasonality. And the reason why I do that is because seasonality tends to be interesting this time of year. In fact, let's make these real comparable. Long-term history of the S&P 500 relative to the current S&P 500. And you can see right here, there's a good quick look at seasonality as it stands right now. Where are we at? Well, first of all, we've been acting fairly seasonal on average, right? With prices kind of coming up. Current, we could see here in that light blue line, and you've got the average over the last 5 years. Well, you notice there is a little bit of a high level that comes in right at the end of July, right there. There is a little bit of a pullback into the first week or so of August before we rally to August, the end of August, and then a pullback into October. Folks, that's the 5-year. Now, that's what we've been seeing over a 5-year. If we give it a little bit more time, extend the time frame a little bit more, make it a little bit more broad, and we say, well, what about 10 years of data? Well, we kind of tend to peak right around the end of July. And we tend to go a little bit flat. Now, would that be too surprising if we went a little bit sideways here after that kind of a rally from mid-June? Maybe not. Maybe not. You have to say sometimes that is due for a pullback. Historically, look at our red line. We do tend to kind of run up to the end of July before we see a consolidation. Looks similar to the 5-year here, but we then just kind of consolidate a little bit to the right before we kind of dip down in September, which was also true of the 5-year time frame. So I think it's interesting to park this in the back of our minds. There's a 20-year. What does the 20-year show? The 20-year is more like, we still get kind of the high. If you add in all of that data, total of 20 years, well, what we're seeing here is you kind of get that high point here, and then what do? You just kind of maybe reach that same point 1 or 2 times before you tend to dip. So still, that represents quite a bit of consolidation before the same sort of seasonal pullback at the end of September right there. So I just want to throw that out there to you because I think if you guys are kind of like me, I mean, maybe you're just saying, we've seen sort of this giant run, and we are kind of in that time of the year where sometimes in July we tend to go a little bit flat. Now, that doesn't have to be the case. I sent a post out on X today earlier, just a news update stating that the U.S. and China have kind of backed off on their negotiations right now. They're just letting the tariff truce kind of continue on for a little bit. But we'll see what happens there. I don't know if the market's like that exactly. We kind of went a little bit sideways, but are we losing a little bit of steam here? Just put that in your minds as we do this. I'm going to draw a couple lines through here. Look at this. Well, let's use this. Let's use the Thinkorswim platform to help us with these lines. So off the bottom here, you see that? You see the slope of that angle? Pretty strong, right? I've got to click on it. There we go. And then what about the slope of this angle here? It's a little bit lighter. You notice the slope changing a little bit? So if you start to make lower lows and lower highs or similar range, maybe it's just becoming more seasonal. And that should make us extra mindful of trades where we're trying to look at possible pattern bounces, flag patterns, because it's going to be sort of tricky in the S&P 500 to get a fair number of flag patterns that are kind of consolidating and ready to break higher if, in fact, we start to pull back here, right? That's just challenging. It's kind of like biking into the wind, which if you like a lot of exercise, you could do that, but man, it's a lot harder. It's tougher to get through that wind. So we're getting to that point. Just park that in the back of your mind. So when you start to see swing trades or flag patterns now, maybe you say, well, what is the market going to do too? And we'll see what does unfold there. But so looking at the markets, that's what we've kind of got there. Just park that in the back of your mind. And then just lastly, here, look at this NDX. Really strong, but still kind of rallying towards the end of July. I mean, the trend's still in check. Let's see what happens there. Now, I don't know if you guys caught the ThinkScript class on Friday, but we did talk about relative strength and what kind of helped bring that to mind. And I actually brought up this chart for the first time in the markets and sectors class right here. It's the sector grid. And basically, you've seen me show other sector grids, but this is kind of cool because it gives you a sense of rotation. I got the concept from Kevin in the coaching group, but rotation. Do we see performance in the sector outpacing the general market down here? There's SPX right down there. Now, there was a request for me to share this. I'm going to share this in class, and I'm also going to share it in the description section just so you guys have this. Let me just do it right now for those of you that don't have it. It's not a ThinkScript, but it is a, boom, there you go. So you should have got that right now into the chat. But it is just a grid, and it's just comparing, potential sector rotation. In other words, what's the strength been percentage-wise of these sectors relative to the market? And many, many of them have been down. So many, right? This one hasn't. Industrials hasn't. That's kind of had sort of maybe a tariff response. Communication services, by and large, has done pretty well. But if this starts to come down, you want to start keeping an eye maybe on areas for other flag patterns that might be showing strength. I do have a utilities company to show you over here. Some of the small financials haven't been doing so great. Some of the larger ones have been doing better. So that's kind of a mixed bag there. But this is going to be really quite helpful as we look at the markets there. Because we're going to dive in. And I did want to take a look at really some stocks that are diverging from indicator divergence. And when you're seeking out huge divergence, sometimes that can help to power through some of these price patterns. So that could be useful in any time, but maybe if the market's heading south, even potentially more useful. Now, just a review of some of the classes or some of the stocks that we looked at last week. So this was one that we'd looked at. This is Ball Corp. Ball did actually have a breakout. This is kind of it's a industrial type company. And you can see that it did break out. We have the potential for an extension up higher. I don't think it's doing too much here. Let's see. We got in. Yeah, okay, just adjusted. I was going to say there's no way it's still up 1,000. It's up. Okay, it's down about 9, right? PL open at 38. So it's actually backed off a little bit. Now, the exit that we had was below this level. Now, I don't know where that went. I put it in midweek. Oh, maybe I did the wrong potential account. I'm not sure. I'm going to go ahead and just show you where that line is, at or below here. I'm going to look at it for now. Just call this a potential exit. But you guys could see that's just going to at or below. Text me if we do run into something here. Now, the target is right near 65. Let me just remove that line right there so you can see it. There's our 65 level. And basically what we were doing on this is we were looking at the possibility just of a flag pattern extending higher from here to here. And roughly from there to there is what we were looking at. All right, so you can see the flag pattern. Like so many companies we're going to be looking at here, earnings could play a key role. Now, we did look at Caterpillar previously. We got out of Caterpillar last week. One of the things that could be driving these companies, we discussed as being tariffs, but really sort of a big macro indicator that a lot of investors and institutions might be using right now is the strength of the dollar. We've looked at a lot of these. In fact, I did a little segment on X, just a short video about some of the companies in materials and industrials. But that's going to be linked also potentially to the strength or weakness of the dollar. If the dollar continues to show weakness, we could see strength in some of those companies, because it's really hard to sell outside the U.S. if you've got a really, really weak dollar. It's a challenging thing to do. It's tough to sell. You can sell in the U.S. just fine, but outside, a lot of these companies really struggle. And when the dollar came down like this, that was kind of a boost, perhaps behind the scenes, to a lot of these price patterns going higher. Now, just keep a watch. If you are looking at materials, or you're looking at industrials, because we talked about it for the last couple of weeks, if the dollar starts to strengthen, got to be mindful of it, because that could weaken profits for some of these big companies. Because not only was it Ball, I mean, Ball would be an interesting one. Notice that Ball did pull back when the dollar strengthened, right exactly over that same time frame. Let me show it to you right here. Here's Ball. The dollar dipped and Ball broke lower. Okay. Same with Cat. No, it didn't. No, Cat, not yet. Sorry. It was John Deere that did, but Caterpillar actually hit our target. Ultimately, we elected to get out last week. It was a very, very long bull flag pattern that it did unfold. But you've got earnings over here as well. DE was the one I was thinking of right there. You can see John Deere kind of consolidating. Now, if the dollar really does break lower, it could really be a catalyst for some of these additional companies within the industrials, right? So that might be something just to park in the back of your mind, because we'd also looked also at Borg Warner. BWA, this is a trade that we have on right now. Got to state too, very important, keep an eye on earnings. We're right in the midst of earnings right here. You can see earnings. Now, the last earnings, as we talked about, was actually pretty strong. Market reacted well, but we are in the midst sort of a trade in here still. There's Borg Warner. It pulled back, so we'd lost our gain there. It showed up at about 1,000, but you can see it pulled back a little bit, but it's still resting its support. Now, I don't know what's going on with our potential exits. We had one down through here as well on the stop side. Now, a stop, by the way, doesn't guarantee an exit at that specific price. It does compete with other existing market orders once it gets triggered, But I'm going to put in here again. I'd like to see them hit and just watch and see, because sometimes, oh, that was an at or above, sorry. But notice over here, I'm doing something important today that I really want you to recognize. First of all, at or below. A lot of these flag patterns that we've been looking at, you'll notice that they're really, really sideways in nature. Some of the ones Caterpillar was one. We looked at many others, but look at this. See this sideways range? We took the trade on this BWA, okay? It broke out, and I think we got it maybe a little bit later in the run, but that was the trade. Now, one of the things that traders might do is when you get a sideways pattern, because we're looking at it right here, this could be a little bit of a sideways range right there. You can see the flag in and of itself. Look at the flag this way. Draw highs off the top, draw along highs off the top, and then draw along lows on the potential bottom range that we're just seeing right there. Now, that is your range. That's kind of your signal. A lot of times, traders might even wait for a breakout above to take the trade on a bull flag, the possibility of a bull flag formation. As you can see down here, they might also wait for and look at this. I found some additional colors to take a look at. Down here, if they were looking at the bottom, if they looked for a bit of a bounce off that low, too, right there. So that could be a potential entry. But what's really nice about those sideways flag patterns is you have very, very little room. Believe it or not, that could be really interesting. Now, earnings could impact that sharply to the upside or the down, and that's one of the risk factors here. That's one of the reasons why we try to look at some of the macro drivers behind the scenes. Maybe there's something that can help us from, or help a situation from being a real disaster, a breakdown in price, for example. I mean, that's one of the things we'll look at in this class. But when you have that tight range, you can wait for the market to give us a signal here. If it starts to come down, well, we already looked at a potential exit there, right? So exiting right there along the bottom. You don't have to wait too much more for a breakout above the top, like an entry just above there. The reason why I bring this up is because there's just a lot of real sideways flags that give us kind of this really tight range, which could be really nice. How we decide to, deal with that situation based upon market conditions. So this is one we're still kind of holding right now. This one did work against us last week. This is WAB. We did have a stop in place. It did take us out of that trade, and it was an earnings related event. Notice down here that we did not get a massive gap down here. Say, for example, it didn't gap down and open, which you might see with a lot of companies that are very, very, very volatile. Some companies are a little bit more stable in nature. They have these low betas, right? The low betas. And so even around earnings, historically, you might not be risking as much. I know there can be variations. I mean, I look right here. That was a decent sized gap. It wasn't maybe, that was a big gap too, for sure. But, we exited right as we broke below that lower level right there. In fact, let me just get a different set of lines, colors here, and I'll show it to you because I think this is really important in terms of potential trade management. Remember, we talked about breaking above the high over here. And when we broke those lows right there, that was the exit, and the stop got us out at that point. Up above, sometimes traders might add to the position up top, but that's keeping it fairly tight, especially when we just have a few shares. I think on this one, I think we had like 25 shares or something, up to 50, but there wasn't a lot of movement right there. Okay. So we looked at CAT. You could see what we were looking at. There was the possibility of maybe a couple of longer term flags right here. Flag, possible flag, as you recall, up top, kind of like the caterpillar flag that unfolded in our favor. There was also the shorter term flag that we discussed right there. Super ultra tight range right through there. Oops, just very, very tight. But in fact, with earnings, it did break down. Some traders don't like that earnings event. I totally get it. That's kind of a big deal, deciding if you want to do that or not over earnings. But some traders, again, fewer shares invested could play a key role, especially if you're right ahead of earnings. If we rewind this, let's say we had 25 shares here as we were in our trade, waiting for the flag pattern to potentially unfold to the upside, wait for a potential breakout, and then add another 25. This way, if we're wrong and it goes against us, which it did, how many shares are we long? Only 25. I say only 25 because some traders might like to use a round lot of 100, right? That's not a big move. It's a fourth of 100 shares, right? Just a quarter of that size move to the downside. If it breaks up, we can add to it. I mean, these are different approaches in terms of trade management that could be utilized here. We'd looked at this trade for a while, and we'd elected to kind of keep some long-term position on this one. This is Mondelez, the cookie company. They have Oreos. Mondelez was interesting because notice we had the breakout here. I still have the extensions in the price range that we could be looking at. for a target. You see the short-term target, there's the long-term possible flag, and then I have a shorter-term one for the triangle range. That's this range right there from high to low. We just took it off the break of the first triangle right there. But this guy has been a sneaky one. And some of these are sneaky. It broke out, it came back down, and watch this. If I extend this, let's zoom in. You guys ever do this? Take that upper trend line, right click on it, and extend to the right. Where was support at? Right there. Over the years, over the past couple of decades, I've seen that happen a lot of times. Now, is it going to happen every time? No. But it could be an interesting area for the possibility of a bounce and follow through. I elected to hold on to that trade. We did make a slight low there, but we did bounce off that level. We're still in this trade. Can't forget this part. Earnings right there. We've still been holding it, but we're doing okay. Is it going to click in gear? PL open 470 roughly on our paper money trade. So it took a long time. We're still just kind of winding and curving higher here, but that's one breakout from the triangle. Remember this, the symmetrical triangle? Lower highs, higher lows as we were getting closer and closer to that apex. It took it out, broke higher, retested, broke another high, and what are we getting here? Another flag pattern. Now, if it does break higher and starts to move, look where it's moving to. We have a couple of targets in place. We do not want to forget these targets. That is the triangle target, and up here, this is the flag target. T for triangle, F for flag, you could see. But if we start to get moving in the staples area, well, could we add a little bit? Perhaps we could. Let's go ahead and just do this real quick. Let's take advantage of the technology on the platform. I'm going to right-click right there. I'm going to scoot on down to create an alert. Notify me via text message, via myself. If this is in fact a breakout, I could take a look at it. I want to probably look at it on earnings as well, by the way. Did you guys know this? Just as a little side note, totally random here. If you find yourself using a fair number of these, you can see I have an exit already in place, potential exit. I've been watching this one without the stops for a little bit. Just been looking at it, at or below, at or above, being notified that on that via text. Quick note, if you come down here, go to create an alert, you notice down here on the price side, there's quite a few selections you can make, particularly if you go right to the bottom. You can go to study. What's under study? Look at this. Folks, we've got the condition wizard in here. We can create a code. We can type a code like we might do in a ThinkScript class to get out by trading below the moving average, or not get out. There is a stop, a potential exit or a stop by getting below a moving average, but there's also a trigger there too. Get me out if you trade below a certain moving average. Very helpful if a stock's been holding up on a moving average for some time, could be interesting. But this is one, I just wanted to park that in the back of your mind, just an update on Mondelez. It's still out there. It is still holding. Okay, yes, there is a beta. In fact, right over here, Myron, yep, up top, trade tab, Mondelez. How is this one doing? Let's compare that against the other one. There's your beta. So it is less than half of the market. Remember, the market beta is a 1. S&P 500 is a 1. So if it's less than that, just based upon the beta calculation, it's less than half as volatile as the market. And sometimes you can see that unfolding. Okay, we looked at, BWA was the one we said probably could have another lower beta. It's right at the market, as a matter of fact. It's about the S&P 500 level on that particular one. All right, well, let's dive into some flags for today. Yep, I know. We've got earnings it's just right there. We've got so many earnings, too. We've got tons. In fact, well, yeah, let's go to calendar and show it to you guys if you're interested. Yeah, and I'm just looking at the S&P. You could set this up just for the S&P, which I did right there. All these companies, and we are all in place. There's a lot. I mean, there's so many here, they can't even put them all in. Like, for example, there was 33 today, 53, 52. we get a lot right now. And as you can see, they're right towards the end of the flags, but we're not done showing you that. All right, folks, well, let me pause for just a second. If you're getting value out of this presentation, you'd like to see some of these patterns setting up, these kind of scenarios or whatever the case might be, yeah, smash that like button. Be sure to subscribe as well. Love to have you on board if you're not already a subscriber. Okay, let's get started. Let's get into what might be flagging now and maybe some of the reasons behind it. I also want to look at divergences as well. So this is a company, so Generac Holdings. In fact, a quick note over here, you'll see it's in the healthcare group. In fact, specifically, you can see over here, they do have healthcare. No, this one, I'm sorry, that's a different one we're looking at. So this is generators, automatic standby, air-cooled. It said it for a second, and that kind of confused me, but there you go. It's actually liquid-cooled engine generators. Interesting. Okay, so this had a massive sort of divergence move that we'd seen recently on it. In fact, the money flow right down here, ooh, let's change that color so you could see this. Remember the money flow line that we talk about had an early kind of a warning breakout right there. In fact, it began right near sort of the bottom on this little pullback. So there was a little bit of a flag pattern here, but it really spiked right there. And you can see what that really did, not only to momentum in terms of the RSI, but also that money flow right over here. Look at this. I mean, that's just huge. And so this spike has cleared in terms of money flow. If I draw a line over here, it's cleared all of this price range over to this point. So it's saying, hey, we might have the possibility of, what did the volume form? Right there. The pole of the move, and we're actually tying volume specifically into the pole of that move. We can see it defined as price, but we're also throwing like another level of indication in there. Momentum showing some good strength, and volume, as you can see right here, and then of course the money flow. Could that be defining the pole of the flag? Because if you can get the flag pole defined with strength, well, then there is maybe some would suggest that they would have a higher expectation then of a follow through of that flag. So we're trying to take advantage of just substantial divergence or massive volume in this particular case. Still a pretty tight range. Of course, we've got earnings. Now, when is earnings on this company? We may want to wait. That's probably, well, I know it's tomorrow, but is it morning? Let's just check real quick. It is before the market opens. So this could be an interesting one. The last few earnings announcements haven't been like massive in terms of price moves. So this could be one, I mean, it's kind of a bearish day today, but what if we break above 50% of this massive, this big bar coming down? I'm just going to put a line right there, which also is right along these tops. Let me know if we get above it. Breakout. I'm going to kind of wait and see what happens on this one, but that could be one we could set up for later this week, just based upon the strength of that potential setup. And a lot of buyers in there, which really shot that money flow. I mean, it's getting close to where that money flow was upwards of 190, 195 range. And what does that suggest? Flagpole off the bottom, just eyeballing it here, but that's like 180, right? And that's like, roughly some range in there if it were to go from where we're at right now off that bottom. Okay, so let's park that. Let's just kind of put that sort of in a list. We'll see how that unfolds. Another one, JBL. Okay, JBL actually up on the day. Again, really, really strong volume over here, just explosive volume across prior highs, as you can see right up top here, breaking above a range. Right now, have we broken up yet? Not quite yet, but we had on earnings there a substantial move, and all we've done since that time is hold that range and begin to kind of break up a little bit higher here. The one interesting thing I have to note about this is we are past earnings. You might guess that they beat earnings, and they guided higher as well on that JBL. And you can see right there, that was a pretty substantial beat. Now it is moving up higher. We don't know how this is going to be impacted by the market in general. We saw, the possibility of some sideways range, but that is like a very, very strong sort of a flag pattern. Now, you guys, where would we draw if we were looking to start a position on this? Where might we be looking at a stop and a possible target? We're above the T1 target range. Let's do us all a favor and go to a 6-month chart. There we go. Putting myself, I couldn't see it. Okay, there we go. So there we have it. Well, you could say that this is kind of a low. It's really kind of the low before earnings. And if we were to use one of the tools over here, bottom right-hand corner of the screen, you can see right here. I'm just going to go over and click on my Fibonacci extensions, just to the right of the fibs. Click one time, give us the top of the range, and click one more time off the bottom. That's our 100%. Where are you, 100? There you are, right there. So that level is about 260, I'll say 65, 265 to that point in time. Now, again, we are past earnings. It's a very, very tight flag. We just barely broke above that top end of the range. So based upon what we've been discussing, that could be a time for somebody to enter a trade there. If they were looking at a flag, just as an example here, and they wanted to see prices kind of, if an extension up higher. So let's go ahead and put a trade on here. It was about 265 to the upside. Now the exit would be maybe a little bit below this point, and we have something to kind of consider here. Oh, well, let's get that back. If you ever messed it up, just go to auto right there. Boom. Okay. Couple of different considerations. We could say we're going to hold it all the way down to this level, or are we going to hold it maybe a little bit higher or closer to this range? I'm going to leave that up to what you guys think on this, but there are different ways to do this. Sometimes if you break out above the high, which we did, you don't want to keep the stops too low because your expectation is what? Strength. I mean, look at this move. This is a strong move with some volume behind it to the upside, weaker volume as we came down, breaking out. We'll see if it holds, but the expectation might be up. So don't we want maybe a little bit of a tighter stop? Maybe so. We'll go ahead and put it around 215, maybe at this low as opposed to that extra low point down here in case you start to dip. Okay, so having said that, I'm only going to do 25 shares as an expensive stock. We can always add to this later if we wanted to. Let's go over here and get our sizing right. First of all, I'm going to go ahead and link all this together. Let's set this up. So our upper target range, it shows that down below here for, well, I'll just do this. Let's just go the 265 roughly. And this was about what, 215. Okay. We'll put these at GTC. We should get a fill here in the last little bit. There's a look at our order dialog box. So you can see that, our confirmation dialog box right there. Okay. And you can see both of those in there. Just confirm what you've got. We'll go ahead and send that on right now. We'll get a sense of what this looks like on the chart. And it kind of sets up exactly to where our, oh, there you are. So that's the upper end of the target. And there is the potential exit level with the stop right at that level there. Okay. So really trying to tap into some strength there. Now, a quick note, I know many of you do like, we looked at a couple of moves to the upside. Let's look at some of the downside now. This is GPC. Now we're getting back into some of those tariffs. I'm going to go to a 1 year to show you this. When I say off the bottom, yeah, this guy's been sort of down for a while. Does anyone see a little bit of a target over here? A little bit of a target maybe with a price pattern. Watch this, a little click over here to the right. Boom, weekly. I'm going to zoom in. Do you see a little price pattern now? Sometimes it's just a lot easier to see on that weekly chart. Shoulder, head, shoulder. So that's sort of interesting because we have this long extended move here on this Genuine Auto Parts that just had earnings, right? And here is that trend line break right there. So you could see that there might be a target, an inverted head and shoulders target, maybe within another flag pattern there. There's your earnings, big move to the upside, and look at that little flag right there, just kind of resting near that prior high point. Right there, just sitting in that range. So we look at a couple that are already past earnings. How's money flow doing? How is that potential for divergence breaking out? Well, we took out these highs very nicely. I'd say this is a little bit more in line, but keeping tabs on that money flow, you can see the plus volume here, and you can see a much, much lighter. When it comes time to sell, maybe a lot fewer less sellers. I'll put it that way. You can see it pulling back right there, very, very tight range. Now, has it broken out yet? No, but it's sort of going even sideways now. So what we'll do, let's do 50 shares on this one. It's a little bit cheaper in price. We're just kind of getting this out kind of quick and getting some of these trades in. But we'll have a potential target. You see that long extended pattern right here? It's going to be up. There could be a couple. Here's your flag, high to low, extension up here. That could be a shorter term range. This is just kind of a mini flag, certainly within our 3 to 14 day time frame. But then again, if we had this pattern, let's just pull it up right now, pull this guy over here, we'll drag this down. That's our breakout right there. And we add this distance to that level. We'll do it quickly by using our Fibonacci extension. So I'm just going to click one time here. What's that range from low to high right there? I'm going to click one more time, and that's going to be right on the breakout. And then we have our extension, about 155. That's a full, I would almost say a little bit longer term weekly flag pattern, inverted head and shoulders pattern, about 155. Okay, so let's get this guy going. The stop could still be below these last lows, but remember what we said with the stop. If we begin to break out above here, oftentimes what we could do, what traders might do, is they might just move the stop to the last low, and that's a big range. So you don't have to really make a huge move in order to move your stop up from this level off the bottom up to just below that level. But for now, let's keep it a little bit longer, just about, 120 or so. Let's go into our trade tab. Let's go through it nice and systematically so let's go ahead and go OCO bracket order. We actually had this at a 155 and then like a 120 down below. I'll put these numbers in. I'm going to go GTC, good till cancel on both. And then over here, we'll just flip this into a 50 and link it to get, oh, come on, baby. There we go. 50, 50, 50, one more. Give me another 50. We got to keep those in check, right? We don't want one exceeding the other. Confirm was going through and looking at the dialog box before we submit the order. And there we go. So that's our second trade in there. Still, again, we're building it based upon strength of volume. We're seeing some pretty good divergence across the board, and namely, just a lot of volume as well. Both of them post earnings with earnings strength. All right. Another one out there, AES. Another bottom one. So there's two kind of on the bottom, and this one is, let's count it. 1, 2, 3. There's your triple bottom. There's your quadruple bottom right there. And you can, oftentimes traders will call it a quadruple bottom or a double or a triple bottom when you take out the high. So some would say that is a bottom pattern right there. Now this one does have earnings. I'm going to go ahead and elect to wait on some of these right now. But that is one we want to, we could keep an eye on too, because the other two were kind of on the upside. This one's a little bit more on the downside, right? Some consolidation. In fact, look at that. Wow. Okay. Over here. I'm just saying, we've hit 10 before. We had a nice move off of 10 over here. I just said, wow, because that's a long pullback on the weekly, as you could see. But showing a little bit of strength off that bottom. Now, just a couple more, and we're going to wrap this up. Look at this, CCL. Okay. Sideways range. There is the possibility of a target. Now, where might the entry be again? It's already in a sideways range. We mentioned it could be off the bottom. Oops. It could be off the bottom. I'll just draw some lines in here for those that are looking at this sort of a flag pattern post earnings, a low here or a breakout here. I may elect to put a trade on CCL this week for this class of paper trade. Okay, a couple more with the big divergence and we'll call it a day. There's XYL. Do you see the divergence over here with that money flow? Money flow substantially higher here, but price is just barely up. Again, earnings, one to maybe look at. LDOS, look at the flag, possible, right there. Really, really sideways. Money flow is going nowhere. In other words, you're getting, according to money flow, the buyers are kind of sticking with. You're not getting much selling in here, and you're resting right on that prior high. Again, though, let's go ahead and wait for earnings. The final one we're going to wait for earnings on is some pretty substantial moves. You don't see volume over here, but it's accumulative for Apple, meaning that, hey, according to the money flow, if it breaks above this high, keep an eye on it, maybe. We shall see. Yeah, how do you draw the fib? Real quick, you go down here, the drawing tool, you click on the fib right there. So the drawing tool's at the bottom. The extensions are what we were using, but the fib, you click on those percentages. If you're looking for a pullback that's been moving up, click off the bottom, then the top right there. There are your fib lines. So just 2 clicks is all you need for that fib. Folks, I hope you found this informative and useful. We're keeping a close eye on the markets right now due to the possibility of seasonality and just the extended run that we've had within the markets. So we're looking at some of these other areas that may be, we're still looking at Mondelez, right? And other areas, maybe in the industrials and materials area. So keep a watch on those, a number of the financials as well. With that, folks, been good being with you. Thanks so much, Cam, for your help in the chat. Everybody have a fantastic rest of the day. I'm going to go take a look at some of the comments you've made here. See y'all next time. Bye-bye.